Well, good morning, traders. This is our weekly trading preview and market analyses for the week of Monday, December the 12th, 2022. Going to be a busy week. All right, let's go ahead and get into it. It is a busy week, very news-driven week, possibly one of the biggest news-driven weeks that we have had or will have all year long, which I guess is fitting, a good way to end the year as we get down to the wire here. But let's get into it and look at some of the details that I want to share with you as we plan our trading week inside of our trading room. So again, in our live trading room on a daily basis, we do look at these technical indicators. I like this setup. It's about 12 different technical indicators with dual overlay moving averages, both simple and exponential. Goes all the way from 5 days out to 200 days. It gives us pivot points. So it really gives me everything that I need to look at. And while we look at this on a daily basis, inside of our live trading room, I like to pull out a little bit here, look at it on a weekly basis, because it is interesting how much chop and how much noise we have had over the last couple of months on a daily basis. And you kind of pull back a little bit and you really see, I think, maybe a little more clear in terms of where our support resistance areas are. But it's interesting, there is a little bit of a divergence here. We're still in sell mode on our technical indicators on a daily basis. But if you, again, pull out here to a weekly basis, buy signal is still in place. It's tenuous. It's just hanging on by a thread, but it is still there, and we are still looking at a buy rating. This week's analysis is going to be a little different than most weeks, where I really dive into the nitty-gritty of my market bias and my support resistance levels and key areas there. I'm not going to do that this week because we do have a huge news catalyst driven week pretty much all week long, and that's going to override any of my support resistance levels. The market is going to do what it's going to do based on those catalysts. So we'll look at all of the indicators. We want to understand kind of where we're at in the marketplace and whether we're oversold, overbought, or more neutral in rating. But again, it's going to be a news-driven week this week, but still hanging on to a buy rating here on the longer-term pictures. If we look at the key support and resistance areas using the EMinis, and by the way, I am still using the December E-mini contract here, so don't get too caught up in price differentials if you're like, wait a minute, this is like 30 points off. The new contract that is rolled out this week, there is about a 30-point differential here. So again, I'm still on the December contract here. But a couple of things that I think are interesting, if you look at this bigger picture here, you know, you can see both the VWAP and the point of control. Point of control being, of course, where most of the volume is. You can see right there in our volume profile here. That's where pretty much all of the activity is. And, you know, it's the same level that we've been at going back to September and just really stuck in sort of this sort of area that is a big demarcation point for me. That magnet, that level, is about 39.47. And again, this is still on the December contract that I'm looking at here. So I think for me, going into this week, this is really the big number for me is, around 39.50 area, again, on the December contract. And that's trying to figure out if we can break this demarcation point, if we can break this magnet and either push up or down. But I do think that if there has ever been a catalyst to finally move us off of our dime here, This week probably could be that week. And, again, it's interesting. We've been way down below this. We've been way up above this. But we seem to come back to this 39.47 level. Now, if we pull down a little bit, smaller window, and this is the time frame that I usually use to set my daily levels as I'm trading. We're looking at a 2-hour candlestick here. Again, there's some interesting levels. I think this 39.47 area, we go back to November 22nd, and it was a key demarcation point for us. November 29th, key demarcation point for us. November 30th, key area. Get into December 6th area. And this is always a big area for me. This is when I know I found a really important level, is when support becomes resistance, or vice versa. Resistance becomes support, but that has become a really, really established level in the marketplace. But, December 7th, December 8th, and even today, on the 12th, you see that this is a really, really key area. So again, on the December contract, this 39.47 level, I think, is the key area. Above that, I'm leaning bullish. Below that, I'm leaning bearish. Okay, so that's about as detailed, really, as I want to get on levels this week, simply because today, as we prepare for a lot of this activity this week that's coming, I don't think we're going to get much action today. And then the rest of the week, really, it's going to be news driven. And we'll talk about that here in just a second. There are quite a few companies reporting earnings this week, and there's a couple that I'm actually interested in. I'm going to take a look at Oracle, and I'm going to take a look at Adobe. So today we've got Oracle on the docket. We're probably going to look at a trade setup in our live trading room on Oracle today. And on Thursday, going to be taking a look at Adobe. Those are the two names that are most of interest to me, and that we will try our best to build a trade around this week. If we look at the sector rotation, you guys know, if you've followed me for a while, that I'm a big proponent of reversion to the mean. I just love the simplicity. I love the idea of Bollinger Bands, this idea that things can get overstretched, either to the upside or the downside. And it's a little bit like a rubber band. You get that, expansion, and then you get that contraction. And obviously what has been killing it for a while here has been energy. Well, that's absolutely flip-flopped right now. Energy has absolutely just gotten crushed this last week. There's a lot of geopolitical issues surrounding that, and as to why that is the case. But one of the trades that we're looking at putting on in the trading room this week, we trade energy, well, specifically oil. We trade a ladder trade on oil every single week. We have 3 or sometimes even 4 ladders on oil that has been, by the way, very, very successful for us. It's of all the ladder trade strategy setups that we use, it is the one that probably has the highest potential ROI. And I'm excited this week, we're going to get back to using the futures, the CL, rather than the ETF, the USO. But aside from our ladder trades, I'm going to be looking at building a long cash flowing type position in energy this week. And just speaking of that, speaking of the sectors and market action this week, we do have a lot of trades that we are looking at doing this week. However, almost every single trade beyond our 0 DTE, which we do every single day, and of course, we're out of that trade at the end of each day. We don't hold that overnight. Beyond that, really, I am looking to de-risk my model portfolio, take positions off, book profits if they're there, raise cash for the latter part of this week as we start to get some of these news catalysts coming in, which again, we'll talk about in a second. But that doesn't mean that we're not going to be trading this week. I have a lot of trades that we're looking at this week. The Aussie dollar, the Japanese yen, Bitcoin, if you can imagine that, and oil. And I'm looking at a pretty interesting, I think, Tesla trade as well. So it doesn't mean that just because we're building cash here that we're not going to be trading in the first part of this week. We go beyond the sector review. We look at kind of what happened in the marketplace. You can see this is 2 weeks ago right here. Pretty healthy, bullish trend. This is kind of the healthy trend that you like to see with a little bit of a mix in the matrix. You don't want all red. You don't want all green. That's not healthy and that's not sustainable. Well, last week it was pretty much all down. And you can see that right here. Very, very heavy selling in the tech stocks. And also, of course, in the oil sector, the energy sector. So again, I'm looking to build this week in our live trading room. I think what's can potentially be a very lucrative cash flowing position. It's a directional trade, but it's primarily built around cash flow in the oil sector. So I'm excited about that. And I think techs are, we've got techs on the watch list right now for later this week after the FOMC comes out. They can be interest rate sensitive, and so we've got that on our watch list as well. So a couple of interesting areas there in the marketplace. If you look at this last week that we just went through versus 2 weeks ago, again you can see pretty much big 180 that the markets took. And you can also, again, I think, and I will reiterate this over and over again, how big of a divergence we had amongst all of these major indices. And especially the Russell, you can see here again, the Russell small caps, very interest rate sensitive, and they just got slammed last week. So again, I will make a pitch for diversification. I will make a pitch for having sort of non-correlated positions interworking at the exact same time. We trade all 4 of these indices every single week in our live trading room. We use a specific strategy for the SPY and the Qs, and we will many times, not always, but many times, start those positions in offsetting manners. So we'll start with a bullish position maybe on the SPY and a bearish position on the Q, and we'll fill that in as the week goes on. So it gives us a lot of flexibility in building that trade. We have a completely separate setup and strategy approach that we use with the IWM. We call it the millionaire maker because that will finish this year, unless we have just a disastrous last week or two here in December. That trade that we do on a weekly basis with the IWM will finish at almost exactly 50% return on the year. We try to garner 1% a week on that. And knock on wood, we have never had a single losing trade with that particular strategy. This past week, I think we came as close as we've ever come in this whole entire year's trading to taking a loss on that position and just resetting for the next week. We were able to manage it, and that's one of the advantages of the millionaire maker trade that we do with the IWM, is that it is pretty flexible in being able to adjust it. But it was a close one for this week. And then we have a completely separate setup and strategy. We use a ladder trading approach with the DIAs, and that has been fairly lucrative for us as well. So again, big push here for all of you. If you're going to trade one of them, trade all of them in terms of strategies. It really will smooth out your risk-reward ratio, your P&Ls, all of that. But interesting dichotomy in the market here. We look at the put-call ratio to try to gauge market sentiment, and we just really haven't had a incredibly bullish or bearish sentiment reading for quite a while here. Last week's was below 1. This week we're just slightly above 1. It's pretty much just a neutral rating right now, which is sort of, I guess, what you would expect going into a very news-heavy week this week. But boy, without knowing what the news catalysts are this week, you can just look at what has happened to the potential expected move this week in the S&P. and get a pretty good idea that something's afoot, right? Something that is coming our way this week. So this is absolutely fantastic. This is just absolutely fantastic for us with regards to our zero DTE trades that we do every day. We have been hurting with the expected moves as of late. In fact, some of our best trades this last week, we had winning trades every single day this last week. In fact, one day we had 3 separate and distinct zero DTEs in one day that all made money for us. But a couple of them have actually been debit trades because we're just not getting paid for the premium that we would need to justify the risk of the trade. Well, that should be different this week. We should be getting some pretty rich premiums this week. So we're looking forward to that. We look at the Fear Greed Index. And again, this does use things like the VIX. It does use things like the put call ratio that we've just talked about. But it just gives us an overall view. And again, we're pretty much now back to a neutral rating. And it's been a while. We were up here somewhere in the greed area last week. And again, now it kind of makes sense as we prepare for this, big news week. And we are sitting again on what I would call the big magnet, the big demarcation point, this 39.47 level. Again, that's on the December E-mini contract. So again, we're just kind of poised here. If you've been in the trading room, our live trading room for a while, I absolutely I absolutely hate neutral rating days because they're just absolutely impossible to build a bias. I think the market hates them as well. The market abhors a vacuum, and it prefers to be trending rather than vacillating. So I think that we will see a change here in that index and that sentiment reading by the end of this week. We look at the VIX sentiment reading. We talked about that. It's really hasn't really changed too much. We look at the open interest levels, and this is always an important number for us. Dark pools, algorithms, high frequency trading. There's so many things that the big players on Wall Street can do to hide what they're doing. One of the things they can't hide is their open interest levels, the areas that they're already working in. And so this is on the S&P. This is not on the futures contract. This is the S&P. And as we sit right now, Friday's close, last Friday's close on the S&P was about 39.34. That was Friday's close. And you can see that puts us right around this sort of demarcation point right in here. But of course, the 4,000 level, that's a huge level. This 3,900 level, that's a huge level. I think anything in between here, guys, is just going to be noise until we see where we get here at the end of this week. So those are big levels for me. I would definitely be looking to put some short positions on and build on that weakness if we were able to break below the 3,900 level. It's only 35 points away from where we're at right now. I would definitely be looking to get some bullish positions on if we could break above the 4,005 level. For me, it's really about 4,002 to 4,006, somewhere in that range. If we could break up above that, that would be a big level for bullish action. Now, we look at the week, and I've talked about this here for several minutes. There's a lot of news catalysts this week going on inside of the marketplace that are possibly going to be the keys for this week. Today, we do have the monthly report out of OPEC. We're looking at building this week a pretty substantive, and by substantive, I mean probably very close to 10% of my overall model portfolio account value, putting about 10% of that into an oil cash flow trade. So that's going to be an important number for us today. Tuesday, tomorrow, we have the UK's unemployment rate coming out. But of course, the big one that we're all looking for is the CPI number. And that may potentially give us a little bit of a window into what the Fed is thinking for this next rate situation, which comes out the next day, which is on Wednesday. On Wednesday, we've got the UK CPI number coming out. We've got crude oil inventory numbers coming out about an hour after the cash market opens up. And then, of course, the biggie on Wednesday will be the FOMC minutes release and Powell's testimony. And so that's going to be a biggie for us here today. And I think that CPI number combined with this, it could finally break us out of this area, this demarcation point that we're in, and give us a clear bullish or bearish signal. But we'll have to see. It's a couple days out. Thursday continues with jobless claims and retail sales numbers coming out. And then Friday, no real big news items out, but that's a quad witching day, last quad witching of the year, and probably going to be pretty active in the marketplace. So this whole entire week is going to be driven, I don't think so much by support resistance levels, so much as news catalysts. That's going to be the big thing that we're watching on. So again, my plan for our trading room this week, we're still going to be trading. We've got, I've got 1, 2, 3, 4, 5, 6, 7, got almost 7 trades on the docket for today, Monday morning. But most of those are going to be non-equity correlated positions that are not going to be necessarily impacted by the marketplace going up or down, which I think it's definitely going to happen. I think that the market will definitely go up or definitely go down this week with all of these news catalysts, but we'll have to see where it goes as the week progresses. So that's sort of our plan of action for this week. We will definitely be trading a lot here today, Monday and Tuesday, but they're not going to be equity correlated positions. And by and large, I'm going to want to be de-risking my portfolio, accumulating buying power and cash, and then getting ready to pounce on Wednesday and put some of that capital to use. So we talk about this quite a bit in trading, but sometimes the best trade that you ever take is the one that you pass. The best trade for you is the one you pass over. Sometimes the best trading days are the days that you don't trade. Sometimes knowing what not to do is more important than knowing what to do. And I think this week is going to be a lot of that. Discipline, patience, waiting, sitting on your hand as a trader. But anyway, that's sort of our plan of action for this week as we go forward. For those of you that are interested in coming and trading with us, talking with us, communicating with our team, our members here, watching what we do, seeing how the trades work out, maybe participating along with us in the trades that we take, you're welcome to come and join us. You can go to the website tryzerodteforfree.com and you can hang out with us for free for 7 days. See if it's something that may be a good fit for you. Anyway, we would welcome you to come and hang out with us. Hope you're all going to have a good week this week. It will be an interesting week, that is for sure. And we'll talk to you guys all soon in the trading room. We're just about 2 hours away from the market open. Take care, guys, and we'll talk soon.